Hello to everybody. My name is Matjaž Kovač, and I would like to represent my presentation, Economic and Social Impact of Taxation on Humanity in Post-COVID Time. I am a Chief Management Manager at ICMEH Company, and I am also a Public Procurement Advisor at Agency of Infrastructure, Republic of Slovenia. Let me start this presentation. Now, first introduction of my thema. Governments need a lot of money to operate and provide the necessary services. Taxes are also a means of some called social engineering, a tool that encourage one behavior and discourage another behavior. Taxes still cause a variety of social problems, such as environmental ones. Whenever a new tax is proposed, legislators try to fill any gaps in the tax law. They invented taxes in order to punish the rich, take their money and give it to the poor. The crowd voted to introduce taxes, which became legalized by the Constitution. However, they forgot a very important factor, namely that the rich are always one step ahead of the poor and that they hid their property of a legal entity that allowed them to use the money before it was taken from them by the state. Taxes are, as it's typical of most financial institutions, a distinct historical category that reflects the political and economic order of each society. Now, what is the purpose of the taxes? The tax system is the sum of all possible tax forms in the country. Tax forms include all taxes, fees, grants, subsidies, and compensations that the state received or gives. The tax system should be terminologically composed as a coherent relationship between the elements, but practice shows that the taxation in many countries takes place through different tax instruments, each with its own objectives and methods. The tax system of countries differ not only on the basis of the subject of taxation, but also on the share of certain public revenues in the structure of revenues of a public fiscal nature. The system of taxes and the tax benefits and market-orientation economies is arranged in such a way that they are determined on the basis of firmly set criteria of an economic, ecological, and social political nature and have at least possible impact on tax neutrality. Taxes can be divided into two categories, direct and indirect taxes. The direct taxes are income tax, profit tax, and property tax. The indirect taxes are sale tax, taxes on alcohol and cigarettes, and custom duties. These are less obvious than direct taxes, but they can be still heavy financial burden, especially to the poor. Manner of state regulation and belonging to a certain international association can also affect the functioning of the tax system. In the international association, it is necessary to take care of methods and ways of unification and harmonization of tax system on individual countries and the elimination of special double taxation. Now, what is the tax financial aspects of tax system? The principle of generosity indicates that taxes, together with one public levies, must provide the resources necessary to cover planned expenditure. This principle must be fully met if we are to have a positive budget balance. The principle of elasticity requires that taxes can be adjusted in time and content to changes in the amount of public expenditure. The principle of elasticity is a variant of the principle of generosity of the taxation, which means that it is essentially a principle of generosity which is not addressed in a certain period of time, financial year, for example, but deals with current developments and budgetary balance. Economic aspects of taxation. Depending on the trends in the economy, the change in the structure of the tax system may also be influenced by the automatically elastic of revenues from certain tax forms. The degree of openness of a country economy also has a major impact on the tax system. Countries that have an open economy pay close attention to competitiveness of terms of taxation. The principle of applicability requires that taxes be set in such a way as to have at least influence on the economic decisions of the economic operators in the country. Non-distortive are those taxes that take into account the effects of income, which means that they reduce the taxpayer income by not changing the subject behavior in the market, as the tax cannot be reduced or bypassed. The principle of modernization of the tax liability requires moderation in terms of the amount of taxation. Determining the amount of taxation can have a positive and negative impact on the individual ability to work and the development of his or her economic activity. The principle of selection of the tax source stipulates that it is necessary to tax only those income of the taxpayer that are dynamic, which means that they are renewed over the period of time. Static property of an individual may not be subject to taxation and may be subject to taxation only in the special cases specified by the law. The principle of stability in the tax system stipulates that it is necessary to establish such a tax system that will not change over the long period of time, as any change in the tax system can significantly affect the conditions of production and economic power to the individual. Tax reform must be not only political, but also a sociality and economically conditioned. The principle of the identity of the tax recipients and the holder of the tax burdens interferes with the statutory duty of the tax debt payer and the influence on the tax system of the transfer of taxes. In doing so, it is necessary to precisely determine the subject of the taxation and all the consequences arising from the determination of this subject of taxation. Social and political aspects. Given the political level, it is clear that the right-wing central governments want a policy of low taxes and the reduction in income tax relative to sales taxes and consumption taxes. Left-wing central governments are pushing for the expansion of the public sector, which also means the higher taxation and the more accurate income taxation. The education of citizens can also be a decisive element in determining the tax system. A country with an average high intelligence class and citizens and develops science and research can introduce into the tax system direct methods of tax return, information technology, or composite forms of sales taxation, which require the active participation of taxpayers and in the tax process. This can significantly improve the functioning of the tax administration. Tax fairness is one of the basic elements of any advanced tax system. The notion of fairness of taxation varies from time to time according to the time period, social structure belonging to a particular school of interpretation of the tax system, and so on. Fair taxation is one that is generally and eventually disturbed among all taxpayers. The principle of generality of the taxes stipulates that all tax subjects must participate in the payment of taxes. Residents of countries are obliged to pay taxes on their world income, while non-residents are obliged to pay only the tax that relates to the territorial source of taxation. The principle of equal payment of taxes often collides with the principle of generality of taxation or taxes. Now, administrative aspects, the principle of legality of taxes, nullum tribum sine lege, stipulates that only the Constitution and laws can establish, confirm, and changes taxes in other public duties. The principle is so important in the tax system that some countries accept it as a constitutional principle and implement it into their constitutions. The legal characteristics of this principle are formulated in 5 requirements. So, only the law can prescribe the origin of tax law. Interpretation of tax norms is possible only in a restrictive framework. An analogy of the tax norms is possible, but to a limited extent. Retroactivity is inadmissible, and all taxes must be legally clear and precisely defined. Transparency of the tax system is important in some developed countries, not only at the level of application of the principle of legality, but also for economic reasons. When a country wants to get foreign direct investors, it is necessary to create such a tax system that will be understandable and comparable to the tax system of a non-resident investor. The principle of minimizing administrative costs refers to the requirements of the cost effectiveness of taxation, which means that the cost of collecting taxes must be minimal. Now, what is the tax objectives? The tax system can have economic, social, and political goals. Economic objectives are divided into microeconomical and macroeconomical objectives. Microeconomical objectives can be thought through the tax system as favor in certain economic branches, increase the workload of taxpayers, stimulate foreign investments, increase the development of underdeveloped parts of the country, accelerate investment cases. So now we have fiscal goals and non-fiscal goals. The fiscal goals are related to new financial resources needed to finance public needs, and the non-fiscal goals are related to an operational tool for managing the national economy. This operational tool can be impact on social policy or impact on domestic economic policy. So now we are explaining the economic objectives of taxes. Macroeconomic objectives affect the relations of basic macroeconomics aggregates. Price stability and full employment are achieved through the operations of the tax on changes in the aggregate supply, consumption taxes, for example, this. When we want to reduce the aggregate supply by increasing the tax liability, it means that we have a restrictive influence on tax policy. Restrictive tax policy can lead to lower prices if there is an excess of aggregate demand over aggregate supply in the market, leading to inflation. Conversely, tax policy must operate expensively, which means that it must raise aggregate demand by affecting the tax system in terms of increasing the taxpayer income. This can be created through the abolition of taxes, the reduction of tax rates, and the application of tax reliefs. The balance of payment is affected by the foreign trade balance through these taxes. International trade will change positively if the principle of the country of destination is in charge and not the principle of the country of origin of goods is taken into account in the taxation. Now, at least and at last, social objectives of taxes. The social objective of the tax system related to the elimination of difference in the material, substation, and situation of taxpayers. Taxes must have their redistributive function. Income tax is most often the tax that appears to be progressive, which means that it affects the economic power to those taxpayers whose tax base is higher. Social political goals can be achieved in different ways. So first is differentiation sales taxation, standard deduction in relation to the subsistence minimum, the possibility of deduction treatment costs from the tax base of income tax, exemption from taxation of benefits on the social political basis, exemption from taxation of small real estate assets. Political goals of taxation are rarely formed in modern market economies. Other objectives can be considered on the basis of health, cultural, and demographical policies. Due to global tax policy, the state must always provide sufficient funds to finance public expenditure, so fiscal targets are always primary. Okay, this is the end of my presentation of my article. Do not hesitate if you have any questions or any doubts to contact me through the internet, email, or phone call. Thank you for your attention and see you soon in some other conferences. Thank you.